Welcome to Baird's IPO Reboot series, where executives can learn the ABCs of going public. I'm Tom Schadewald. I'm a director in our equity capital markets group based here in beautiful Milwaukee, Wisconsin. In today's episode number 12, we'll be closing out the series with a special episode titled The Ultimate IPO Guide. I'm delighted to be joined here today by Lise Buyer, founder and partner of Class 5 Group. Liz, I'll turn it over to you to introduce yourself and give the viewers an overview of your background and focus.
Will do. And Tom, thank you very much for inviting me to participate in all of this. It's a very cool series you guys have been running. And again, I'm honored to be the I don't know, the caboose or the closer or the last leg, whatever it is. So the Class 5 Group was founded about 15 years ago by me. I had been an institutional investor for T. Rowe Price for a long time. And so I was making the decisions on the various IPOs that came through, at least on the technology side. And after a wonderful run there, I left and I went and became an investment banker. And I moved out from Baltimore to California. And I was able to see the IPO process from the perspective of the investment banker. And I was quite surprised to see how very different the perspectives are from the buy side, hey, we're going to buy this company and own it for a while, to the sell side, our job is to execute the transaction as effectively as possible. So stayed in that role for a time and then left and became a venture capitalist for a brief period and discovered, again, that it's a third perspective, which is the people who are currently on the board and what are the issues that are top of mind for them during an IPO. And then finally, I decided that if I was ever going to be a really successful venture capitalist, I should go to work inside a company to understand the mechanics of what the IPO looks like from inside and what are the focuses of employees and management versus those of the bankers or the board members. Or anyway, so I was very fortunate and went to work at a small company in Mountain View, California that did search things with a primary color logo and two O's in the middle. And while I was at Google, we did a very unusual IPO. And that was incredibly important to suddenly see that there's a lot of flexibility in the IPO process. And we did something very different because that was what the founders, who were also our largest shareholders, wanted to do. And that was just really head spinning for me. So I stayed at Google and did a year of investor relations for them, and then didn't want to do investor relations anymore. So I left and said, wait a minute, I've been on the buy side, I've been on the sell side, I've been on the board, and I've been a project manager of sorts. Quite accidentally, I might know more about the nuances of the IPO process than anyone who, as I like to joke, keeps a job. And I recognize that those companies, and I'm almost done with this monologue, sorry, but I recognize that those companies going through the process really understand their business. They understand semiconductors or pasta or enterprise software or DevOps. They don't know the nuances of the IPO process. And while you work with a number of advisors, from bankers to lawyers, there's plenty of folks out there, most of them are serving two masters at the same time. And there is no one who is totally dedicated only to trying to help management navigate the process. And so I set up a business that I like to refer to as being a caddy for management. The spotlight is on the golfers, is on the management team. But it's nice to have someone with you who has played the course hundreds of times in the past and can offer insight or suggestions, or, hey, if you do this, it means this. If you do that, it means that. Anyway, that was a very long-winded answer to. So what we do is Class 5 Group works with a very small number of companies each year to be the absolute aide de camp for the management team through all aspects of the IPO process, from preparation well before you hire bankers through the handoff to those who will do IR for the long term. So that was my long-winded answer.
Well, it's great to have you on. Obviously, you've sat on all sides of the process, so I'm sure your insights will be very valuable here for folks just embarking on their own IPOs. And so touched on it a little bit, but maybe as a good starting point, if you could just talk about kind of what role the IPO advisor plays in the IPO process, and when should issuers look to engage with you and your team in that IPO process timeline kind of overall?
Sure. What do? We literally are there to answer in a completely unbiased fashion because we only serve the company, questions that come up, help with negotiations of all sorts, whether it's helping you devise a syndicate to get the most out of the bankers that you're going to be working with, or whether it's frankly to negotiate some of the fees for some of the other third parties, just because sometimes we get better pricing than any company would on its own because we work with the same vendors a number of times. So we are beholden to no one but management. So what do? We help companies make sure that they've done all the right planning before they get going, that the financial operations are working as they should, that the right people are in the right seats, that the board looks like the right kind of board. And if not, we can maybe make some suggestions of some folks who might be worth interviewing. We help companies really figure out how to tell their story most effectively. Again, this is all before the official processes goes. We try to understand why a company wants to go public. There are a number of reasons, but let's try to optimize for whatever it is that this particular company wants at this time. There is no IPO playbook. There is no, we do it the same way every time. It's, as I mentioned, we work with a very small number of companies, and that's because what we offer is a very bespoke service. Why is this company going public at this time? What are their strengths? What does the management team already know about how to go through the process? Where could they use extra help? So I guess the headline would be, we're there to help on both a strategic and a logistical basis. And again, it goes back to my golfing analogy. What club do you use on this hole? And let me carry some of the bags, because management, you need to focus on the IPO and you need to run the business. So that's really what we do. And there's a long list of very specific ways that we get involved. We like to tell people we are not technical accountants, and we have not passed the bar. Well, actually, my business partner has passed the bar, but we don't operate as lawyers. But pretty much the rest of the process, we can engage very closely across the whole institution, the whole organization, department by department by department, to make sure everyone is ready before the process begins, and then to make sure that the process runs smoothly for a happily ever after. When is the best time to engage? As I sometimes like to say, there's three choices. There's long time ahead, so that you can set up time to, hey, let's meet on the second Friday of every month to talk about this particular part of the process. Then there's the ideal, which I would say is 6 to 9 months prior to hiring bankers. And that's because the more I can understand, Leslie, my partner, the more Leslie, who works with companies in the East, or I, who works with companies based in the West, can understand about your business, the more we can help, again, optimize the transaction for what your company wants to do. And then the third approach, there's the long, slow, gentle glide up, there's the ideal, and then there's the pants on fire approach, which is not ideal, but we can do that. The short answer to your question, 6 to 9 months before you're ready to hire bankers is the ideal time to get the most out of what we do. And just for reference sake, we get paid on a project by project basis. So hiring us 9 months early doesn't cost anything more than pants on fire. So you may as well get the most out of the service that you're paying for.
Yeah, no, those are all fantastic points, and I think I hear a lot in these sessions. Earlier is always better, and I think for true independent kind of IPO advisor, that can almost be even more critical, because it allows you to show up to some of those meetings very prepared, whether the banker meetings or hiring any of the other advisors. Having some insight and hearing that from a third party can be highly beneficial, I think, the management teams.
Culture matters throughout this whole process, and the more that we can understand the literally day-to-day operating culture of the business, the more we can be helpful. And the one thing I would say is the one time that's too early is when the management team is very much in flux. It's nice if a company has its CFO in place before we go in. It's not mandatory, but that certainly is helpful.
That's a great point. And maybe shifting gears a little bit. Obviously, we've been in a little bit choppier of markets, but I'd be curious, based on your experience, what were some of the best IPOs you've worked on historically in markets that have been less accommodative like they've been today? And are there any lessons learned or tips that you could share with issuers looking to go out in kind of the near to midterm?
Yeah, I'm going to be a little circumspect about the folks we've worked with, because we always want it to be the company's IPO. And so nobody needs to really know that we were there in the background. when somebody has a great IPO. I'll use one because the company was acquired. So long ago and far away, Zillow had a competitor named Trulia. And that was such a fun deal to work on because I must have been 18 months before they were ready to hire bankers. And I just met with the CFO periodically, and we talked about, how does the allocation process work? How does the banker selection process work? What are the key things that institutional investors, we literally would have sessions on all parts of the process. So that was a lot of fun. There have been a number of others that were fun where we ended up raising much more money than we expected to. There have certainly been some challenging ones along the way, but what are the takeaways? God, there are like 500 of them. Know why you want to go before you start the process, right? It's a big deal. Going public is a really cool accomplishment and a very big deal. But what really matters is the long run, not the day of the transaction, but how are you situated ever after? And so I guess takeaway number one is understand why you're going. There's lots of reasons, but the more you know why you're going and why now, the better the process will be. That's certainly a takeaway. It's your IPO. Everyone says that, but you really need to mean it. You're going to have to live with the outcome. So it's nice to hear from your board. It's nice to hear from all sorts of folks, but you're the one who has to make the decisions on picking the bankers or what structure of a transaction you want. Great input from board members. You have to live with it. So I guess that's another takeaway is we've seen management teams be pushed into some things that they didn't really want to stay with, and that became problematic later. But I should end on other takeaways. It's kind of cool, like it's fascinating. And we can look right now at a large number of companies that thought they were going to be public in 2022 or 2023. And then because of market conditions didn't go, but they had done a lot of preparations, and those companies are most of the preparations that you do will make yours a stronger company, whether you remain private longer than expected or not. Just being able to close the quarter on time, again, having a good communications practice, having your financial operations work as you want them to. Anyway, sorry, long-winded again.
Yeah, and so maybe on the flip side, are there any like pitfalls or tactics that should be avoided, especially in a tougher market?
No one will forgive you if you miss your quarters. Do not go if you cannot forecast your first couple of quarters with a great deal of confidence. And we say this to every single potential client. And if you look at the total IPO market, you'll find that maybe 50% of companies going public miss Q1 or Q2. Do not go if you do not have comfort with the forecast, which, by the way, is partially why we've had a very quiet period this past year, is because with interest rates doing what they were doing and markets doing what they were doing, it's been hard to tell. But that's first and foremost, be able to forecast. Other pivots, don't race to hit a certain window. It's not really up to you. You can't control the timing of the SEC. You can't control the swings of the market. Know why you want to go, heads down. Let's follow a path. Let's do weekly updates, red light, yellow light, green light, to see how things are going and stick with it. At the very last minute, if it happens to be a terrible day, you have the ability to say, I don't want to go right now. Let's wait a week. But don't have an idea of roughly when you'd like to go, but don't play market timing games, because you won't win. You may get lucky, but it's very hard to do that. So that's another pitfall. And a third pitfall, it's so important to hire bankers who really understand your business and really care about your business. Be very finicky in the banker selection process. It isn't about, again, I'm going to pick on a board, it isn't about who the board owes a favor to. It's about who really understands and cares about your business. So focus on getting the right complete syndicate, not just don't give it all to one, or you've ceded control of the process. Put together the right syndicate and make sure it's the right people at those firms. It's not enough to hire a logo. It's got to be the right people at those firms.
It's the topical time of year to be talking about the presidential election. And so how do you think about the IPO timing in a presidential election year like next year?
Just as the last answer, don't be playing market timing games. You know, everybody guessed in 2016 after the election, the market would go straight down, except it went straight up. Don't play that game. We don't know. The market was volatile last year. The market will be volatile this year. Markets are volatile. Know why you're going, know what you're trying to accomplish, and literally keep your eyes on that line and go.
And maybe I think like people have different definitions of success sometimes, whether it's pricing at the highest price possible, raising the most money possible. What do you think's the definition of success when it comes to an IPO process?
I love this question because, Tom, you got it exactly right. Different people have different perspectives. It goes back to, why are you going? If you desperately need money in the treasury, maybe success is getting the highest price you possibly can. Maybe that's not what you're looking for. Maybe you're looking for publicity. Some folks are. Maybe that means you price lower than you could, so that you get the headlines about the stock was up 80%. You know, that's a lot of people on the outside who aren't necessarily involved in the deal will say, oh, they left all the money on the table. There are times when management wants to leave money on the table, either because it gets them better press, or more importantly, because they understand that the price on the day of the deal is very nice, but then you have to live up to it. And if your IPO is priced on a multiple basis much more aggressively than those companies that are your peers or your comps already trading in the public market, you're not going to keep that valuation very long, unless you're absolutely convinced that your revenues are going to accelerate and you're going to get profitable or increase your profitability sooner than expected. So price to where, sometimes folks want to price to where they believe the stock should trade, not necessarily to where the frenzy of the day will go. The answer to what is success is, what does management think success is? What is management trying to accomplish with that transaction? And so sometimes it's best price, sometimes it's rational price, sometimes it's getting the right shares in the right hands of the right investors. Varies all over the map. But it's a key thing to, again, understand before you go. What are we trying to accomplish?
And then maybe I like to ask the same question at the end of each episode to all my guests. It doesn't have to be limited just to today's topic, but if you were to give 3 pieces of advice to a company that's looking to go public, what would those be?
Gosh, I'm talking like a broken record. Understand it's a long process. And understand, even though you're probably getting audits now, when you tell your auditing firm that you're getting ready for an IPO, it's a whole different process. So one piece of advice, start your public ready audits early. 2, again, I don't want to keep saying the same thing over and over, but be sure you know why you're going. And I'll put a comma on that one and say, and be sure you have the right people in the right seats. You don't want to have management changes shortly after you go. And the third piece of advice, of course, is hire me. But another good piece of advice is again, understand it's really fun to go public. It's much harder to be public. Be sure that you are ready, that don't rush it to hit a multiple. Make sure you can focus, you can close the quarter, you know how to communicate internally, all of those kinds of things. So be ready across departments.
Those are all great points that I think you highlighted here at the end. And so I'd like to thank you, Liz, for your time today. I'm sure the viewers will find it very valuable to hear your insights for years to come. If you'd like to get hold of either Liz or myself, you can find our contact info on our respective company websites, or just shoot us a DM on LinkedIn. Thanks for our viewers for tuning in, and thanks again to Liz.
Thank you very much, Tom. It was a pleasure being here.